Right, let's get our first guest in then. Samiran Chakrabarty from StanChart is with us. Samiran, hi, morning. The next important data that we'll get is the IIP data on 12th. What's your sense, looking at the core data as well, do you think there are enough signals for a bit of bottoming out and starting maybe this IIP data, the economy will get good news?
Well, the infrastructure index growth at 8% is clearly a big green shoot, if I may call it, in a long time from the perspective of growth. So obviously, this will get reflected in the IIP print as well. Particularly, I think the sectors which really surprised on the infrastructure side were electricity, coal, and cement. Out of which I'm slightly concerned about the electricity, because the electricity output, which was very high for the month of September, particularly on thermal power, in October it has come down to just about 1.2%. So I'm not sure whether this trend will be continued for the next month, but at least for this month's IIP data, expecting a much better print.
Samiran, hi, good to see you in this morning. I just wanted to get one technical detail out of the way, because the core sector growth has come in at 8%, but if you just go back to the August data, we had the core sector growth which came in at 3.7%, but the IIP data as overall came in at 0.6%. Would that be any sort of concern for you when you factor in this 8% growth, that maybe there would be other laggards which could possibly pull down IIP?
Sure, that can always be the case, but even if it is pulling down IIP, still it should be a very healthy number, probably the best that we have seen in fiscal year 14. And if you look at it for the month of September, exports data was also quite significant. So overall, I think we are going to see a much better number on IIP this time. My worry would be continuing this trend, because it seems that some of the component of this infrastructure index has not done as well in October as they have done in September. Also, you have to note that generally September and October have been very good months for this infrastructure index in the last few years. So it is beating the base effect consistently.
Samiran, just wanted your word on the deficit picture, because while everyone is now sanguine about the current account deficit, the finance minister is still saying that 4.8% fiscal deficit target still remains a bit of a line in stone. Do you think he's being a bit over optimistic on that front?
Well, when we got the August fiscal deficit number, as in fiscal year till date August, at 75% of the fiscal deficit, we were very worried. But as you know, last week we have got the September, so first half fiscal deficit number at just 76%. So from 75 to 76, the pace of increase has significantly stalled on the fiscal deficit part. It's still a very tricky situation. In the second half of the fiscal, we are dependent on quite a few significant lumpy revenues to fund the deficit. If we get these lumpy revenues, in particular I am referring to the divestment, the HZL Balco stake sale, any money that can come from SUTI asset sales, these are all very lumpy revenue items. If we get some of them in place, then with some amount of expenditure control, it is still possible to get onto that 4.8% fiscal deficit mark, but it is going to be a touch and go situation which is quite tricky to manage.
Samiran, what about current account deficit? Because the finance minister did mention that it could be even sub 70 billion, and that's possibly what the street is also working with. What is the level that you think would be sustainable for the current account deficit, and do you think that it would be an aberration which is only limited to this fiscal, and maybe it would be a problem that would re-emerge in FY15?
Well, let me make 3 points. One is that the trade deficit number that we had seen in September at just 6.7 billion, this will increase substantially in the months ahead. The second point is that even with that increase, the current account deficit for fiscal year 14, according to our estimates, is going to be only about $45 billion. And third, you are right that we haven't possibly slain this table completely over the medium term. There are still some inflexibilities in the current account, which I would rather want to get addressed very, very quickly. So over the medium term, I still keep my worries ahead, but for fiscal year 14, I think we are going to be positively surprised on the current account. Our estimate is just 2.5% of GDP, which is roughly half of what we had seen in fiscal year 13.
Samiran, what's your house call on rupee then going forward? Because we've seen from the levels of about 60 half or so, 61 or so, there's a bit of selling that we have seen. Going forward, what do you think is going to be the trajectory?
Well, for this quarter, we are pretty optimistic on the rupee, thinking that it's possible that it will move towards the 60 mark, maybe even breach it on the downside. But this is the story for this quarter, where we are particularly seeing a lot of risk-on activity globally on the back of QE tapering and this debt deadlock being settled. However, we are not so confident for the first quarter of 2014, where we think that 2-3 issues could come back. One is clearly risks of QE tapering back again. Then there could be this debt issue again coming back in US. And domestically, I think the political risks will be at its high point in that quarter. So given all that, we think there is a possibility that rupee could move in the other direction at that point of time. The balance of payment for the rest of the year looks very comfortable, but it will depend on RBI's intervention strategy on how much dollars RBI wants to buy. That could possibly put some kind of a floor on rupee appreciation.
So Samiran, with the positive indicators that you're expecting from the current account deficit, do you think that we've averted a rating agency threat completely? And if so, how long would that be possibly averted for?
Well, our sense is that with the current account threat now gone and the fiscal in a situation where it can be managed for this year as well, any rating action will be deferred till we have clarity on the election results. So from now till the national elections, we do not see any rating action coming. If anything, the rating agencies will look at how the political system evolves post the election before taking a final call.
All right, Samiran, thanks very much for joining in. So that's the view coming in on from StanChart, where they do expect the current account deficit to be much better than what the street is working with. They're expecting around $45 billion, and they are very optimistic on the rupee as well. They expect it to possibly move towards the 60 mark. So some positive indicators possibly coming in. They also expect the September IIP to be quite strong, or maybe even the strongest that we've seen in FY14. But currently